Good everyone, welcome to Capital FSN Academy. In today's class, we will be treating support and resistance in details. In the previous class we have done, we thought about how to use support and resistance to mark out your charts in different time frames. So in this video, we will now practicalize it so that you can see how we combine different time frames, so be able to mark out a good entry. Now, this is the trade we took this morning, and currently it is running in profit. Currently we entered it with 100x, and this is 130% already. So now I will delete this chart and we'll reanalyze it. Remember from the previous class, I told us that support and resistance is the basis of trading. It's the foundation of all strategy that we'll be using. So now, like I've told us, when you want to start analysis, firstly what you need to do is go to daily time frame. Now, the reason I always tell you guys to go to daily time frame is because as a learner, train yourself on how to look at the market on the bigger picture. Don't just focus on what the market is playing at the moment, because it will always use you. Because you are a novice, because you are new in the system, you might not, maybe when the market is kind of making a funny movement, you might not get to know it earlier. But if you have checked the higher time frame, at least the foundation of higher time frame telling you, oh, this market is on a support zone, or it is on a weak zone, or it is this, or it is that, it will help you that when you are taking a trade on a lower time frame, you will know that, oh, I shouldn't go to buy because this market is on a resistance. So what should I do? Let me wait and see if I can see an entry for a sell, or I've seen a breakout on a daily time frame. So what am I expecting on a lower time frame? Okay, lower time frame is coming down for a retracement. These are the things you will be looking at when you are analyzing a trade. So now, going to daily time frame now. This is daily time frame. Remember I told us that you need to zoom in your chart. Zoom it in. So if you zoom it in now, you can now see, okay, this market now, if you look at this, if you put this line here, remember I told in the previous class, I already explained to us how to use your trend line. So now remember I told you trend line just to indicate the pattern of the market. Is it an uptrend or a downtrend or a wedge? You understand? So that is what we are using it to identify. So I will not waste time on our support and resistance here. I will just put this our support zone. I will remember what I told us before about the markets picking a point. This is our support zone. This is another support zone. That is a resistance turned to a support. So this is our resistance zone for the meantime currently. Currently this is our resistance zone. So this is what I've seen on a daily time frame. So we'll be going forward to 4 hours time frame, lower time frame. So from lower time frame now, we can now say 4 hours time frame now. 4 hour time frame is a lower time frame to a higher time frame. You understand? To daily time frame. So now on 4 hours time frame now, we can now see that it is perfectly showing us that this market is on a resistance zone. Yes, it is on a resistance zone. And as a trader, even if you see an entry for a buy, you should be very careful in this case. You understand? Because currently it is on a resistance zone. That is first thing you should tell yourself. Then another thing we are looking at now is, okay, is there any adjustment? You look back, you recheck, is there any adjustment? For the meantime, I don't see any important adjustment, so I have to add up to some lines. So now looking at it now, I change it to a line. Why? I want to fish out I want to mute the noise in the market. Now that is the week and every other thing that is happening in the market. So I want to follow the actual trend of the market. So now, if you look at it clearly, I will change the color. I will use another trend for me to detect the difference between the daily time frame supports and resistance zones and 4 hour time frame support and resistance zone. So looking at this chart now, I can now say this was a support zone, and the market, we are expecting the market to come back to this zone. We had a fake breakout at this zone, and after the breakout the market went up again, and that is what has been happening in the market. So now at this upside, it is still playing along with our daily time frame resistance zone, so we are not going to add it. So now I've added all I need on a 4 hours time frame. So I will move down to 2 hours time frame. On the 2 hours time frame, we can now check that this market here now. See, now let me explain how this market played out now. So this market, after moving from this level, after coming from this level, it broke a resistance, turning the resistance to a support. Then we can now change it back to our candlesticks to see if it didn't come back to this zone for a retracement. It's ranged and continued. So after continuing, we had a massive dump at this level. After the dump, it gained momentum and it ranged again, showing you that is a force acting at this zone. That force that is acting at this zone is what made us to now say, okay, let's place a support here. Now remember, I told you that support and resistance is a tool that is used to mark out the historical movement. Not only that, the work of support and resistance is to mark out area of force, and that is what made me to tell you that support and resistance is not just a line, but it is an area, and that is where your SMC and ICT comes in, the strategy, when you start marking out the areas of support zones or the areas of resistance zone. But currently we are just using support and resistance as a line, and because we are using it as a line, that is where we are looking at the areas where the market had the most effective pulls. So if you look at this market now, we had a pull here and we had another pull, making it a double bottom. After everything, it came back and retraced and it went up. We had a massive pull. Then what happened? The market came back to that region. Coming back to that region, it cleared the liquidity at this level, and that is why you can see the market going below it, clearing the liquidity, and it moved up again, but you couldn't meet the height of this level. But all of them are still playing at the area. So if you doubt it, or you don't understand what I mean by area, is that if you mark out this zone this way, this like this now will be the area of a resistance level. So this box is just telling the area of the resistance level. So that is what it is. So now after retracing to this level, it pulled it back, telling you that there is actually an opposing force here that is pushing the market or supporting the market from going below to going above. You understand? Going higher again. Then the market still tried, after hitting the resistance level at this zone, then it tried pulling back and breaking below. But after breaking below, the candlestick actually closed below the trend line, the support level. It closed below it, but what happened? It pulled back. Now in this video now, I want you to understand something. You hear people saying breaking below, fake breakout or breaking below. Now I always tell my students, when you are analyzing a trade and the market come to a resistance zone or a support zone like this part, when the breaker candle, remember the breaking candle, when the breaker candle now close, let's assume the market come to your support zone and the breaker candle now close below the support zone, then know it that, oh, we have seen a break of structure or a break of support, market breaking a support zone. But that does not signal that the market will continue falling. There is a fake breakout. Now for you to know a fake breakout, I always tell my students, when you see a candle breaking or closing below your trend, your support zone, perfectly, I always tell them, check at least, look at 45 minutes to 2 hours. At least see the breakout on either 45 minutes to 2 hours time frame. Then when you see it that the candle have closed below this zone, The reason I put this area, this box here, is that I marked out the supposed area of the support zone where we used as the support zone. That is what we marked out so that we can be able to detect when the market has broken below. So after testing this zone, it came back and break below it because of this level. I marked out this from this level to this place that the market have come before. That is where I marked out as the area. Some people will mark out the imbalance. I have not come to imbalance. If you're marking out the imbalance, that means they will bring it downward again. You understand? But I'm not yet talking about the imbalance currently. That will be a topic on its own. So now, at this level now, the breaker candle now closed below it. But what happened? I always tell them, when it closes below it, wait for at least 2 or 3 more candles to close below that level. Yes. Now that this candle have closed below it, let me show you. Now that the candle closed below it, wait at least 2 more candles to close below this zone. And I always tell them, when you need to see 2 or 3 more red candles. So far is a bearish market that is broke a support zone. You should see at least 2 or 3 red candles forming below this zone without breaking above. By then we can now say we have seen a perfect breakout. You understand? But provided the market just break it with 1 candle or 2 candles, there is a high possibility this market can still pull back and close up and pull back above. And whenever you see a market after breaking below, you now pull back and close above, 60% of the time the market continue going up. Anytime I see this movement, I always take a very high leverage on that trade. I always believe it will not break below the previous low. Now that the market now fakely break above, anybody taking the trade currently, we are looking at this level, below this level, to be our resistance, our stop loss zone. But now let's go back to what we are explaining. So now this 2 hours time frame, as we were explaining. Now, as we can see, as we are saying, the market is on a resistance zone on a daily time frame, 4 hours time frame, and also 2 hours time frame. In fact, on an all time frame, the market is on a resistance zone. So now, as it is on a resistance zone, you are looking at the perfect place for you to enter the market. Currently, your support for buyers, remember I told you that we are just like grass. We support the people that is winning. Our support for buyers are now like 20%, while the remaining 80% we are hoping for sellers to come in. So this for 2 hours time frame, as we were saying. Now, what am I now looking at now? I am looking for a sell. So I'm now going down to maybe 45 minutes time frame. I'm jumping 1 hour time frame to see if the current situation of the market is it on a support zone or on a resistance zone. So now this is our resistance level, and the market is coming to our resistance zone. Another thing that we will check that the market did previously is that if you change it to a trend line, you can see that this market is kind of the low of this place is higher than the low here, and the low here is higher than the low here. So if you look at it clearly, you can now put, let's just put something like a trend, like a line. Now this is a line we have put. Okay, this is not perfect this way. Let me use this hit here. Now you can see the trend line is already showing us that this market is going downward, even though it is not obvious at the upside that it is going downward. But currently, what have we gotten here? We have gotten a triple top at this zone. Bam, bam, bam. We have gotten it here. You understand? So now, if you are bringing SMC now, they will tell you this is a break of structure. The markets had this level now. It broke it at this zone. Then another break of structure at this zone. So after the break of structure, what are we expecting? Remember what I told you, when a market break a bearish structure, that means the sentiment for sellers are higher. When it break a bullish structure, that means the sentiments for buyers are higher. So currently we are seeing many proofs showing us that the market needs to sell. You understand? So now we are now tackling, we'll now go forward to the things happening in the current market, like happening today or happening currently in the market. So I will now put a trend again to kind of identify the kind of level that the market is showing me. Remember, I always tell you that anywhere where the market reverses from, anywhere you see the market reversing from, it is because there is something that made the market to reverse at that zone, and that thing is money. So anywhere I see a hit on the market, I always put a line to check the the relationship. You understand? So now putting this line now, you can see that this market, after reacting this level, we had a massive reaction at this zone, then we had a massive reaction at this zone, we had a massive reaction at this zone, and currently the market is reacting at this zone. What is it telling you? It's still a force that is pushing it down. After reacting on the former resistance zone, we have another trend uh, um, zone that the market is responding to. So what are we expecting now in the market? What we are expecting is that we want the market to break a structure currently, and that breaking a structure, that is what will bring us to putting a trend line again at this level to mark out a level, and this is the level we are marking out. Now we're marking out this level, we are using this our trend line below to mark out the break of structure. The perfect break of structure that we are expecting from this market is coming from this zone. Is coming from this zone, but we are not going to wait for this market to get to this zone before we now go back for a sell. No, what we are waiting for now, because we have the bigger picture of the market going in for a sell, so we'll be hoping to look for a place to go in for a sell. I will invert the chart so that it will look more clearer for you. Now if you look at this chart now, what is it looking like? It is looking like a falling wedge, like I always tell you guys. It is looking like a falling wedge, and a falling wedge, when it is a falling wedge and when a falling wedge is acting on the support zone, it is a signal for an uptrend. So currently let's look at this chart now as if this is the normal chart. Now this is our normal, this is our resistance zone on the daily time frame, but looking at this chart, it is acting as a support zone. Now it's acting as a support zone at this chart because we inverted the chart. Please put it in your mind, we inverted the chart. So that means the market is ranging downward, coming to this resistance zone. We put it back to a chart. On a chart, the market have hit it the first time and it's respected this level the second time. So there's two things that might happen. Is either this market come back to pick it again before selling, or the market starts dumping at this zone. So for us to be in a safer side, that is why we have stop loss. We will now try to look for a place we can pick an entry, and that is how we got the entry that we got in the beginning of the class, the trade we took today. But because we are reanalyzing a chart, we are looking for another possible entry for us to get into this market. Now if you now look back previously, we can now see that we had a massive hit before a dump previously. Now let me invert the chart clearly back again. The reason I inverted this chart, for those of you following the my videos, you will discover that I invert a chart when you kind of get confused on the pattern. When you invert a chart, it has a play in your memory. The way you picture it will not be the same way you picture it again. You will see clearer picture of the market. You understand? That is why I always invert it. So now we had a massive pull at this zone. We had a massive pull at this zone. So I will put a line at that zone to see how the market respected their level. And if you put a line at this zone, we can see that the market came to this zone before, come to this zone before, and currently it has broken this zone and is coming back to it again. So this 45 minutes time frame, I will now expand my chart because I have seen what I wanted in the market. So now we are looking for a place to go in, jump in for a buy. Now the same level that we marked out, we can see that the line is now cutting on a precious candle, which some people call an OB. So if you are taking a trade at this zone, our stop loss need to be above this level, but we are not taking it yet. Why? Because we are going to respond to this level. This level might be a trap. This market is bouncing down, bouncing up from a retailer's zone. This is a retailer's zone because it's a lower time frame order block. It is a retailer's zone. So because it's bouncing up from a retailer's zone, remember your the rule of demand and supply. When the market pick a demand zone, the target should be the previous supply zone. Now this was the supply zone, and this is a demand zone. The market is picking, has peaked. So what is the next level? The market will come. That means the people that took this trade, their take profit is at this level within this candle. This candle will be the area of take profit. So if we are taking our own trade, we should not jump into this level. We should see this level as an inducement. So because of that, we are now looking for backward. We'll go back to check if there is a precious candle we can see for the market to come back for us. Now, when we took this trade this morning, the markets, what we use to analyze the markets, this is it. Sorry, we put it on a trend, and this was what we did. This was what we did. So now, in the previous class, I told you that left shoulder plays a very big role. So we picked this level and we made our stop loss to be above the head. So currently we are seeing the same thing playing out here now. So we are going to a lower time frame to analyze the break of structures on a lower time frame. So now we will go to 15 minutes time frame straight up. On the 15 minutes time frame, let's now analyze how the market has broken structures. Now I will delete this line here because it have already solved what we wanted to identify. So now you can see this market moved from this level. After going up, it pulled back, go up again, pull back. What is it telling you? A higher high, higher low, higher high, higher low, higher high. Then instead of it to make a higher low and continue, it tried to make equal low to continue, but it couldn't continue. It now dump again. Now bringing the strategy of your support, your uptrend. When the market, if this place serves as an inducement, this is supposed to be the entry, the stop loss below this zone. Now the market is coming to clear the people at the stop loss zone. So what are we going to do? If we are on this trade, we can now go in for a buy, for a scalping buy. But if you are going in for a scalping buy, know it that the market has a high possibility of kicking you out. Why? Because on a higher time frame, the market is on a bearish zone. Oh, it's a peaked it already, sorry. So people that has money can go in with CMP. People that has money can go in with CMP. Our stop loss just below it. Our stop loss just below it. Then after this, why are we taking this trade? So remember, this trend line is now our take profit. This trend line is our take profit. So because of this thing now, we will now go back. We remember we were looking for a sell. We will now go back for our sell. We start looking for a possible place. If the stop the take profits for these people are here, then where should our stop loss, our entry now be? Our entry, I will now go back to the trend line to see the reaction of the market. This is where the market reversed from after clearing liquidity, and this is another level we are looking at. So what am I looking at now? I am looking at this level again, coming back to the shoulder, to the left wing. So looking at that level, I will put another line at this level. My stop loss will be above here. Then I will come back to this zone. Then I will come back to this zone. I will go back to 30 minutes time frame. Excuse me. I will put these charts on 15 minutes time frame, only in this interval. Then go to 30 minutes time frame. On 30 minutes time frame, it has changed this thing. So now put my entry. I'm marking out the box. You see, what did I do? I just mark out the area where I expect the market. So now this is another area for a sell, which is our former entry. So the market might come back to our entry before selling. Then where is our target? Our targets remain at this zone, the next support zone. So for you guys, follow up for more, subscribe, like and share. Comment if you have a question, you can ask through the comment section. Then during our next video, we always check the comment sections to check to know the questions or where people are getting it wrong. So this is the practical example of how to use support and resistance and trend line to mark out your entries. So currently you can't just jump into a sell currently, because this is where we are supposed to see our breakout structure, but we have not seen it. At this zone the market peaked an order, so it's a perfect place for people to enter a CMP going upside before a sell. So thank you so much, guys. Always practice. Remember that practice makes perfect.